What's going on, everybody? So happy Monday. I hope you guys all had a fantastic trading day. So let's take a look at the tape. Okay, let's take a look at the scoreboard, see what kind of happened today with the NASDAQ 100, the triple Qs. So, starting last night, just going into the overnight futures market, into pre-market, just a nasty sell-off. If you watched my videos from last night when I was kind of going over the live futures, on /NQ, I talked about a couple of levels. Those levels were that 381 and that 378 level. So what I had kind of said is that, if the triple Qs were to gap down, we had some kind of continued selling pressure after pre-market, that the level that the Qs and the bulls need to hold is going to be these two wicks here. And that price was at 378 area. And that's coming all the way back to December the 3rd. So not only did we lose that area, but we fell below it. 377.52 is now the new lows. But for the bulls case, it was immediately bought up going into the end of the session. So just to kind of talk about this market crash that everyone seems to be talking about, here's what really needs to happen. This is the second day closing underneath the 50 period moving average. Okay. So anytime we start building below the 50-day moving average is generally not a good sign. So anytime we also have selling, we're also going to get these dead cat bounces. So what we need to see is currently in the after hours right now, we're currently trading on the triple Qs at 382.25. Futures are also up 75 points, although it's still very early. It's only 5:30 p.m. Pacific Standard Time where I'm located. So the point that I'm trying to make here is that tomorrow we could completely get a dead cat bounce. We could get a bounce somewhere into the vicinity of this, anywhere from 381 to 385. The big level that we really need to look at is going to be this 387. That's going to be the 50-day moving average. If somehow the triple Qs do bounce over the course of the next couple to a few days and we get into this $387 area and we cannot reclaim the 50-day moving average and we get rejected and immediately the bears start to, fade us back downwards at that 50-day moving average, then we are going to need to look at that second entry flush through today's lows, which is 377.52. If we start building below 377.52, let's say we do come up in the vicinity of the 50-day moving average and get rejected, and we start to fade back down and lose 377.50s, and we start building below, then we're talking about a bigger correction, okay? So right now, I feel like I keep saying this every single day, but we just need more information. We need more data. If you're not comfortable trading, day trading, scalping in this environment, then take your foot off the gas and just relax. Watch the price action. Let things settle out. If you're currently holding long positions, maybe let's say you're an investor, maybe you're looking, you got some leaps for next year, 2023, 24. I really wouldn't be too concerned right now. It's just too soon to, start jumping the gun. Until we start to see that 10-15% correction in the triple Qs, then that's a different conversation. Right now, the price action is messy. It's choppy. It's volatile. Everybody wants a volatile environment until you can't handle the volatility. So with that being said, is everybody wants big movers up and down and up and down. However, when the moves are not going in your favor and those moves are massive, you can really start to feel the effects. So if you need to take a little bit of time off, if you need to take a break from trading, if you need to take just a breath and kind of just evaluate the market, there's two things that are going to happen. The triple Qs are going to reclaim this 50-day moving average, and that's going to start the rally going into 2022. Okay. The second thing that could potentially happen is we make that attempt to reclaim the 50-day moving average. We get rejected and we fade back through 377. Just to look at the big picture here, we've tested 380, 378, 379, 2, 3, 4 times now. how many times can we continue to keep testing this level before, the wall finally breaks? So what I'm trying to say is the bulls stepped in today and did a fantastic job, but how many times can they keep defending the same area until it gives way? What needs to happen, and it needs to happen this week, and it has to happen this week for any kind of bull case scenario. The bulls need to reclaim the 50-day moving average on a daily close. If the bulls cannot reclaim the 50-day moving average on a daily close, and we continue to trade underneath the 50-day moving average and lose 377, we will go into a 10 to 15% correction on the triple Qs, and that's going to affect a lot of big tech stocks that all follow what the triple Qs are doing and that are involved in the NASDAQ 100. So with that being said, let's look for some sort of dead cat bounce tomorrow. Let's be very, very scalper mentality. Let's take our cash flow and let's be safe. It's not really a swing traders environment. I wouldn't recommend putting on, a ton of swings going long right now just due to the market. And I wouldn't put on a ton of swings going short just due that. You don't want to get trapped. Okay. This is a cash flow market. And if you don't know what a cash flow market is, then you haven't been trading long enough to be involved in this specific environment of a market that we're in right now. I would highly suggest just kind of, just waiting and staying patient until we either get trending on the bull side or we completely lose this level and start trending on the bear side to make things a little bit more easier for you. I hope that helps, guys. If you want to do me a favor, join my Discord. That link is down in the description box below. Also, leave me a comment, thumbs up, and subscribe to my channel. I would highly appreciate that, and I will see you guys all in the next video.